Now, I just want to give you a heads up that the biggest tax refund surge yet is coming in 2026. Now, there's already official IRS adjustments that are out there, along with forecasts like places like JP Morgan and TurboTax, and I can confirm what they're predicting is spot on. So in today's video, I'm going to break down my prediction on what will happen and why this surge is ahead and who stands to benefit the most. So give me a thumbs up if you're good with that. Okay, let's begin here. President Trump's One Big Beautiful Bill passed back in July of 2025, and this is shaking up taxes in a huge way for millions of Americans. Now, we're talking about the changes that apply to your taxes in 2025, which you're going to file early, 2026, just a few weeks away at this point. And this is the most sweeping tax overhaul since the 2017 Tax Cuts and Jobs Act. Now, according to JP Morgan's analysis, they expect the average tax refund to hit around $3,743 this filing season. Now, this is roughly $500 more than last year, or about 15% higher. So keep this in mind. That's an average, and some folks could actually see bigger bumps, like $1,000 or $2,000 more per TurboTax estimates, while others might get less. So these retroactive changes are happening, and we're talking to multiple accountants over the past couple weeks here. And my prediction is that most people will end up with a noticeably higher refund. And this is what all the accountants kind of have told me. Now, again, I want to answer the big question, which is crucial to understand what's happening with this surge. Why is this even happening? Well, first off, you have to get to what a tax refund really is. And it's basically a government giving back the money that you overpaid throughout the year. So it's not like found money, it's your money. Now, for instance, your employer withholds $200 in taxes from the paycheck as an estimate, but when you file, turns out you owed only $150 per paycheck. You're going to be getting back that extra $50 times however many paychecks you had, and boom, that's your refund. So with that in mind, why will this OBBB lead to a massive surge? Well, it's all about the new tax deductions and credits that kicked in retroactively from January 1st, 2025. Now, payroll systems and withholding tables, they were set up under the old rules in the first half of the year. But before the bill passed, all this is happening in July. So it's nobody's fault here that the system wasn't following the law at the time. But now, with lower taxes for the whole year, there's a ton of people who have overpaid, and they're going to get that money back as a refund. Now, I just want to give you some more clarity here, and this is a simple example that I drew up. So let's pretend that you worked overtime every month from January through July. Now, under the old rules, you owed $2,000 in taxes for that overtime, and exactly $2,000 was withheld from your checks. But now, under the OBBB's new overtime provisions, only $1,500 is taxable. So you overpaid by $500, and it comes back to you as a refund. Multiply that across the millions of taxpayers, and you got a surge happening. So my prediction is, if any of these changes apply to you, your 2026 refund is going to be inflated big time. Now, let's run through some of the key groups that can expect larger refunds based on the IRS's recent adjustments. Now, let's start with seniors. So if you're 65 or older, by December 31st, 2025, you get an extra standard deduction boost, and that's $6,000 more if you're single, or $12,000 if you're married filing jointly. Now, that's on top of an average standard deduction, which is jumping to $15,750 for singles and $31,500 for joint filers. So that's one good thing. But next is tipped employees with no tax on tips deduction. Don't know if you heard this, but it maxes out at $25,000 tax-free, but it phases out over $150,000 of income for singles, or $300,000 for joint. Now, get this, it's not itemized. So even if you take the standard deduction, you qualify. So I found a chart from the Bipartisan Policy Center that's super helpful. Let's take a look at it. And it works like this. For a single filer at $300,000, you still get about $10,000 deducted. But joint filers, they get that level at a full $25,000. And it fully phases out at $400,000 for single, or $550,000 for joint. And then there's overtime workers. Now, no tax on overtime pay. That's up to $12,500 for singles, or $25,000 for joint. And it's phased out at the same income levels, $150,000 for singles and $300,000 for joint. And again, not itemized. Now, here's a quick example, and I'm just using round numbers. Not everybody's making this kind of money, but if your regular rate is $100 an hour and your overtime is $150 an hour, only the extra $50, the half time and a half, is tax-free for federal income tax. But the whole thing does still hit Social Security, Medicare and state taxes if it's applicable. But here's a fun fact. About 60% of Americans are in jobs that are eligible for overtime. So this hits a lot of people. And residents in high tax states, I mean, you're probably cheering because the SALT deduction cap, that jumps from $10,000 to $40,000. And that's state income, local, and property taxes all combined. But that is a huge win for places like California or New York. And families with kids with child tax credit bumps from $2,000 to $2,200 per qualifying child. And it's fully available for 200,000 single filers and 400,000 for joint filers. But there's one more big one here. So car loan interest deduction for American assembled new vehicles bought in 2025 or later, following year, up to $10,000 annually, not itemized. This phases out at $100,000 for single or $200,000 for joint. And used cars don't qualify for this. So as you can see with all this stuff, all these changes from the OBBB, it's set to affect tens of millions of people. Now, my prediction aligns with a lot of the experts, and we're going to see a record refund this season. And some estimates are saying refunds could be 1/3 larger overall, or an extra $91 billion in total refunds flowing back to taxpayers. Now, on the economic impact, this is expected to juice the GDP by an extra 0.5% in the first quarter. So it's going to be all together first quarter of 2026 per JP Morgan. So think about this. 117 million refunds averaging $500 or more. That's like a mini stimulus worth billions, sparking spending and growth and who knows what. So I agree that the fourth quarter 2025 might be whatever it is, but the first quarter of 2026 gets a real boost from this. Okay, now I want to end with this prediction that's for the future. So you can expect larger paychecks in 2026 compared to 2025. Why? Because we have these newer, lower tax rates and deductions that will be baked into withholding tax tables and payroll from day one of next year. So your take-home pay actually rises. But what that means is the refunds that you file for in 2027 for 2026 taxes will likely be smaller than this year's surge because it's going back to normal since there won't be that retroactive overpayment that's going to be inflating things, right? So listen, if you remember this little talk that we're having right here, right now in 18 months, don't be surprised when your 2027 taxes and your refund shrinks from 2027. So it's just because 2026 is basically artificially boosted by all this backdating. Well, I just wanted to give you the heads up, and a lot of people are in for a pleasant surprise this filing season. So please subscribe, and I'll keep you up to date on how all this stuff unfolds. And I just want to say thank you so much. I do appreciate your support, and I wish you a very happy day. Take care, guys.